Hi there, I'm Tyler Ballhorn. Welcome to the Trade Scores Market Analysis for October 4th, 2010. Today was an important one in the market because we had a little bit of a breakdown of the upward trend line. On the left here you can see a chart of the Dow 30. Let's blow that up. And in this detail here you can see that the market broke its upward trend. We actually started to see some bearish signals coming in a couple of days ago, and we're starting to get some follow-through of that now. Given that there is earnings coming out this week, given that we have employment numbers out this week, there's a lot of uncertainty, and certainly gives the bears a little bit of reason to short the market and the bulls a little bit of reason to sit back and wait with that uncertainty. So I advise some caution this week as we get through some of that uncertainty. Now, not all markets did that breakdown. Here is a chart of the Emerging Markets Index, and it is in a very strong upward trend, probably too strong. I don't know if I would chase this market here, but if you are long the emerging markets, we haven't seen a breakdown here yet, and therefore I would stay long on some of the foreign markets, particularly in Asia and Brazil. Let's boogie on down to the S&P 500 ETF, SPY, very similar to the Dow. It also broke down today, and so I suggest caution with this index as well. Same can be said for the NASDAQ. It has been selling off for the last few days. Really, it's a situation where we have some profit taking, and that's quite reasonable given the gains that the market has made. And I personally am taking profits on anything that's a big winner, unless it's in one of those sectors that is not correlated to the overall market, like the gold sector or perhaps the oil sector. Let's take a look at the chart of gold. You can see that it continues in this very linear upward trend line. No reason to be a seller here yet. I don't like buying it here. I think it's too late to get on the gold train. We may see it pull back to that trend line, but this is a nice linear upward trend, and I expect that trend to continue and will only be bearish when that trend line is broken. Let's take a look at the oil chart. Just cycle our way down here to the chart of oil. It's had a real nice move over the last 3 or 4 days. Probably pulls back in the short term. We've come into some resistance here from these past price peaks, and then there's further resistance there. But my expectation is oil probably pulls back for a couple days here, but ultimately it should move higher. One of the key things with oil is the US dollar index, and we can take a look at that chart. I've got it down here at the bottom. And the US dollar bounced back a little bit today, which is what caused a little bit of the weakness in the stock market and in oil prices. However, the downward trend line in the US dollar continues to remain. We've got a pretty sharp downward move there. We may break that in the short term. I wouldn't be surprised, but ultimately it's got to break that longer term downward trend line before we would get too optimistic. Let's take a look at the Canadian dollar as a comparison with the US dollar, and I have that chart right here. Canadian dollar has been benefiting from the weakness in the US dollar, but of course also the strength of gold and oil. It is nearing a historical resistance point here at 98 cents. We're almost there now. I expect the market for the Canadian dollar will hit that, but we'll probably get stuck there. And given that the US dollar is a bit oversold globally, we may take a few days before we get to that point, and ultimately I'm not sure that we'll get through that 98 cent mark. I don't think it's time to sell Canadian dollars and buy US dollars, but just expect a short-term bump in the road on those currencies. So in general then, I remain optimistic on the markets in the longer term. I think that the trend shaping up longer term is good. However, I think in the short term, do not be surprised to see a little bit of weakness, and particularly through this week. Not a bad thing to take some profits, and you'll probably get a chance to buy those stocks back cheaper in the future. What I want to show you now is the Trading Desk Trade Tracker, and this is a great tool to keep track of your own trades. You can see here the trades that I have made over the last little while. There's a number of different columns here. You can see the hold period is this area right here, the risk-reward ratio, where my current stop is, all of those kinds of things. Now, you can do all of this for you, and what's nice is once you have entered your trades in the Trade Tracker, you can jump to the Charts tool and get a quick overview of all the charts of the stocks that you hold relative to their reward for risk lines. So here, for example, is a stock that I entered today, and then my entry price was $1.54. It's currently at $1.72, which is a little better than a 2-to-1 reward for risk ratio. I always like to analyze my trades relative to the reward for risk, and this is a great tool to help you do that. And as you can see, I can cycle through all my trades and see how they're doing very quickly. For the busy trader, this is a great way to keep track of the stocks that you own. And if you want to see them in more detail, just blow them up and you can see that there. This is a free tool to use on TradeScores, and I encourage people to take advantage of that and get in there and use it. I think it'll help you in your own trading. Well, that has been the TradeScores market analysis for October 4th, 2010. Have a great week in the market and trade well.